Greetings. It's time for another video where we in fact debunk a well-known person who is giving his financial opinion on a number of things. And because of the age of this person, a lot of his assumptions are based around 1960s, 70s, and 80s conventional wisdom, which is obsolete in the technological age. Not that there wasn't technology then, but the amount of the economy that was high-tech back in those days was too little for traditional investment theses to be proven wrong the way they are being proven wrong now. Robert Kiyosaki is someone who has written a lot of books about personal finance and has taught a lot of people basic concepts by relating stories and things like that. And he has been very successful in doing so. But having skills as a storyteller about basic personal finance anecdotes is a very, very different thing than being a skilled investor in the modern age. And average people will be misled into thinking just because Robert Kiyosaki is successful in the activity of selling books about personal finance anecdotes that he knows what is good from an investment perspective. And he is unusual in that he is advocating both gold and silver, precious metal investments, as well as Bitcoin. And there's very few people who are pro both. Usually people who are pro gold and silver are against Bitcoin and vice versa. But he is pro both of those, contradicting himself many times in the process. But never once does he actually mention what would have worked over the entire 50-year plus investment time horizon that he's speaking about, which is an equity index like the S&P 500 or even better the NASDAQ 100. So we are going to deconstruct many of Robert Kiyosaki's statements over here because a lot of people still listen to him, and many reasons why beliefs from the 1960s and 70s are no longer current in the high-tech age will present themselves, and I will link to other videos that I've made on this channel for further reference material. So we begin.
In the next spending bill. They're even proposing recurring automatic direct payments. But my next guest says that all of this free money will only impoverish the poor and the middle class. Robert Kiyosaki is an entrepreneur. All right, Robert, you recently tweeted that while the free money may make people happy now, that is going to be very short-lived. And as I mentioned, some Democrats are already pushing for recurring direct payments and automatic unemployment insurance extensions as part of the so-called Biden administration Build Back Better plan. So break it down for us, Robert. Why is this stimulus going to crash the economy and impoverish the poor and the middle class?
The reason it's not going to work, it goes really simply to this law here. It's Gresham's law. Bad money drives out good money. And so all the money these Democrats or whoever they are proposing, it's just going to print more fake money, more bad money. And it's going to drive out good money, which is good for gold and silver and some crypto. But the Biden plan is just going to just drive out. It's not going to work.
Okay, so right there we already see one problem, which is that he doesn't define what is good money and what is bad money. That is very vague. And fine, that's something that probably appears in a lot of his books, and therefore he is pushing one of his favorite memes. But he fails to mention that quantitative easing has actually been going on for 12 plus years. And this video is from April of 2021. But quantitative easing has been going on for 12 plus years. It has not caused high inflation, certainly up to April 2021. And over the entirety of that period, the average annual rate of inflation is not high, as I have many videos about on this channel. But gold and silver really have not gone up at all. So despite all this quantitative easing, gold and silver have failed to rise over the vast majority of this 12-year period. So he's just repeating something that has not manifested, and saying it more times does not make it true. Someone of his generation is likely to believe that, oh, of course this would cause gold to go up. This is what the economics textbooks of the mid-20th century say. However, those textbooks had incomplete information and were not equipped to take into account the high-tech age. So we continue.
Work throughout history. You look at Gresham's law here, it didn't work since the time of the Romans. You know, when they were filing off the edges of their coins to get the silver out of the coins. Violating Gresham's law brought to power a man named Adolf Hitler, which cost, 20-something million lives when all counted in. And as you know, from being from South Africa, Zimbabwe violated Gresham's law. So every time Gresham's law is violated, we have massive problems. So the Biden plan is going to make it 10 times worse.
All right, but break it down a little bit more simpler for us. What is Gresham's law, and why does this free money ultimately serve against the interests of the middle class?
Well, because it only makes them poorer.
How does it make them poorer, Robert? I guess that's the point I want to get across to our viewers. How does it make them poorer for those not familiar with Gresham's law?
Okay, so let me say what Lenin said. The best way to destroy the capitalist system is to debauch the currency. So what they do was when they print all that money, and what Marx said is that there is only one way to kill capitalism, and that is by taxes, and more taxes. So you look at what Biden's proposed.
So the other problem here is, yet again, quantitative easing has gone on for 12 years. And all this talk of debauching the currency, it's very memorized. Everyone who is trying to push a narrative that quantitative easing has already caused hyperinflation and will make gold go up is pushing a narrative that the dollar has been debauched when, as we know from videos like this one up here in the upper right-hand corner, the United States is only 25% of the entire world's quantitative easing over this 12-year period. The US dollar is not any weaker than it was against the euro or the yen or the British pound relative to 12 years ago. It's actually a little bit stronger. So how has the dollar been debauched when other countries are printing just as much or more, and the dollar trades at about the same conversion rate in relation to all those other currencies as 12 years ago or even 30 years ago? Japan, where Robert Kiyosaki's ancestors are from, has in fact done 4 times as much quantitative easing as the United States in proportion to the size of Japan's economy. So Japan hasn't gone under or collapsed as a society, and their currency has not been debauched. The Japanese yen is not necessarily any weaker compared to other major currencies than it was 25 years ago either. So that much quantitative easing, 4 times as much as the United States, is what Japan has done, has not caused this currency debauchement that he is talking about. So when will they admit that what they expected to happen has not been happening? Now, the last part is the only one he's right about, which is too much taxation is negative for the economy. And that is why my Atom plan presents a solution in which quantitative easing has to start replacing income tax dollars on humans one for one. In other words, the taxation burden has to gradually and in a measured and orderly way move away from humans and onto automation so that the safety net is in fact funded by automation. This will be very obvious to people in the future, but in this day and age, even in 2022, extremely few people are thinking like that. So we continue.
He's going to print $4 trillion, and he's going to raise taxes. So what they're trying to do is stimulate inflation, but that makes it harder for the poor and middle class to survive. And so they feel good. They get this free check. It's going to be universal basic income, or MMT, which I call a Marxist monetary theory. It's bad money. It has never worked throughout history.
Well, it stands to reason then, Robert, that if we do have all of this inflation and all of the stimulus and taxes being raised, that, to your point, gold and silver seem to be the best hedge against that. Is that what you advocate? Is that how people should be protecting themselves against this?
Well, that's why I said in 1964 when I was 17. And then when Nixon took the dollar off the gold standard, that's why I went looking for gold. But throughout history, every time they've done this, it doesn't end well. So that's why I've been saying buy silver, buy gold. But for years and years and years, I've been saying buy silver, buy gold, because that's real money, not ETFs, real gold, real silver, and keep it in safes far away from your house.
So he openly says that he's been buying gold and silver since 1964. Note that he never once talks about the returns of gold and silver, because the returns of gold and silver over that entire period that he has been purchasing it, which is almost 60 years, has been terrible. Especially over the last 40 years, the returns of gold and silver has been terrible. Yet he keeps telling people to buy them, and buy them. He does not tell them to buy a stock index like the S&P 500, which has left gold and silver in the dust. But he is very aware that the returns of gold and silver have been terrible, because later in this video he's going to talk about Bitcoin, and in that the first thing he's going to say is how much it's gone up. Only with gold and silver does he not mention how much what he has continuously bought into for his entire adult lifetime since 1964 has failed to go up, and why he's trying to get others to buy more and more of it But the investment thesis is just not sound because everything that he's talking about is very theoretical, has no awareness of the information economy or the accelerating rate of change, and he's not admitting that the returns have been terrible for what he has been recommending for such a long time. He's hoping people won't check. That's why you need videos like this one, because I'm going to show you the gold and silver charts at the end. So we continue.
Well, Robert, you're a tad unusual in that you're a staunch advocate for precious metals, gold and silver, as well as Bitcoin and Ethereum. Now, although many are coming around to holding both, glad I bought Bitcoin, next stop 50K, wall of institutional money coming 2021, buy below 20K. If you missed Bitcoin, buy silver. Silver set to move due to AOC's Green New Deal. America in trouble, future bright for gold, silver, Bitcoin, and entrepreneurs. All right, let's break down that advice there, Robert. You said buy below 20K. If you missed it, buy silver. Is it too late to get into Bitcoin? Where do you see it going?
That's a very good question because it's always the entry point. Like I bought Bitcoin at 9,000 and I thought I was being fleeced. And I think it's going to go to 1.2 million in 5 more years. So I'm still...
So let's look at that for a second. He was very willing to make a price prediction of Bitcoin 5 years from the time of this video. So 2026 is when he's predicting it will reach 1.2 million. But his tweet was kind of crazy in that if you can't get into Bitcoin, buy silver. He is the only person who is probably a fan of both precious metals and Bitcoin because usually those two camps are very, very contradictory to each other and dislike each other. For example, Peter Schiff is very much into gold and silver, and Peter Schiff's recommendations have performed terribly. But at least Peter Schiff is skeptical about Bitcoin. Robert Kiyosaki is just pushing what might be popular in the media because his thesis does not explain anything about, well, if you miss your chance to get into Bitcoin below a certain price, you should try and buy silver instead. Yes, he says that silver is used in certain tech products, but then you should buy the companies of those tech products, not one of the commodities that is a component of those tech products. That doesn't make any sense at all if you really understand where the value add from investment returns comes from. So it's very haphazard in terms of what he's predicting, and notice how he was quick to talk about the returns of Bitcoin, but he never talked about the returns of gold and silver, even though he admits to having been buying gold and silver consistently since 1964. So we continue.